Are you a business owner who is looking to pay themselves this year or looking to pay yourself a little bit more this year? You're listening to Business by the Books, the podcast that teaches you how to use your financials to manage your business. My name is Danielle Hayden. I'm the founder of Kickstart Accounting Inc., where we use bookkeeping as a vehicle to help business owners really take control of their numbers. We've helped thousands of entrepreneurs make informed financial decisions for over a decade. Today, we're going to be talking about how to pay yourself as a business owner. So first of all, why should you pay yourself? How much to pay yourself and when? And strategies to increase your profit and pay yourself more. We as a team were recently celebrating one of our Kickstart Accounting Inc. clients. She had started with Kickstart Accounting a few years ago, and one of her number one goals she shared with us in onboarding using our financial goal setting worksheet. She shared with us that her goal was to pay herself a six-figure salary to finally replace the salary that she had left to start her own business. Now, it hasn't been easy. It's been a 2-year roller coaster for our client as she learned how to pay herself, the best method to pay herself, and the trials and errors that she took in order to determine if six figures was even the right amount for her. When she started, six figures was an ego move, and what she learned was that what she actually needed was much, much more. Now we've got to celebrate our client who is now not only paying herself, but paying herself more than her goal amount. Now, as a business owner, you have two roles in your business. The first role is as a business owner, and the second role is as a business operator. Now, your salary pays you as the operator of your business, and that reasonable compensation is how much you would have to pay someone else to do your job. Whereas as a business owner, you get to receive owner profit distributions that are over and above reasonable compensation. So our first method to determine exactly how much you should be paying yourself as a business owner is the reasonable compensation method. Now, as an LLC, you are not required to pay yourself a reasonable compensation from the IRS. The IRS doesn't care how much you pay yourself as an LLC, but you actually have the freedom to be able to take out as much in owner's draws as you need or want. I always consider owner's draws the cash ATM of your business. You're not paying taxes on owner's draws. You're not a business expense, and you are not lowering the amount of net income your business pays at the end of the year. So as an LLC, why do I want you to pay reasonable compensation anyway? I want you to pay yourself a reasonable compensation through draws as an LLC to get yourself in the habit of paying yourself like the CEO of your business. But I know you are. Now, we've had so many clients over the years who have become an S Corp and really struggled with the needs of their business to pay themselves through payroll and pay themselves a reasonable compensation. And I want you to be set up for success. So as an LLC, as early as your business can afford, I want you to start paying yourself so that your business is able to sustain the cash withdrawal from your business on a long-term basis so that when you become an S Corp, which I know you will, your business can sustain that cash being pulled from the business. Now, my S Corp friends, you are required to pay yourself a reasonable compensation. Now, this isn't a Kickstart Accounting rule. It's not a KSA Tax Partners rule. It's not even a Danielle Hayden rule. This is straight from the IRS. The IRS says that if you are going to be an S Corp and enjoy those benefits, you have to pay yourself a reasonable compensation through payroll. Again, reasonable compensation just means how much would you pay somebody else in your location to do your job. Now, at KSA Tax Partners, every single one of our clients receives a reasonable compensation report every year so that you know exactly how much to pay yourself. And then you can feel confident in taking any owner profit distributions that are above that amount. You know that with that piece of paper, you are ready for an audit and can pass an audit. So that is the first method of how to pay yourself is reasonable compensation. Now, if you're not ready for reasonable compensation and you need to look at the numbers in your business, I want to share with you the rule of averages. Now, there will be a worksheet at kickstartaccountinginc.com/pay pay yourself to download this worksheet and be able to walk through this exercise together. Now, by using your own numbers, you can go to your QuickBooks report and pull both your balance sheet and your income statement by month for the last 12 months. Those will be the two reports that you need for this worksheet. We'll get back to the show in 1 second, but real quick, are you a business owner feeling overwhelmed by your finances? Do you find yourself wishing you had more control and understanding over your money? Managing your business finances can often feel like navigating a ship through a storm without a compass. But what if instead you could master your business finances in just 5 days? With the confidence to manage your money, make informed decisions for financial stability, and implement strategies to increase your profitability effortlessly. That's exactly why the 5-day video bootcamp was created. It's a comprehensive course designed to empower you with the foundations for financial success. Throughout the bootcamp, you'll learn the foundations, how to manage costs for profitability, evaluate investments for growth, and avoid common financial pitfalls. So if you're ready to take charge of your financial journey and rewrite your success story, head over to esuite.co/5-day bootcamp or click the link in the show notes and sign up for the bootcamp today. Okay, back to the show. Now we're going to start off with your cash balances today. How much cash do you have in your business in both your checking account and your savings account? And then how much money do you need to have in savings for your business? So the first column is how much do you have currently? The second column is how much do you need in the future? And then the third column will calculate for you so that you are saving that amount over time. Now, how much money should you have saved? I recommend that you have 3 savings accounts. The first savings account is 3 months worth of operating expenses. The second savings account is your tax savings account. And your third is for future investments in the business. So we want to have 3 savings accounts that we're saving for our future. Next is our debt payments. So we're still working our way down the balance sheet. How much do you have to pay in monthly average debt payments? This is so important because debt payments don't land on the income statement. So we can lose sight of our debt payments. So I want you to go through and determine how much each month you need to pay in your debt payments. Lastly is the income statement by month. How much are your monthly average sales or cash deposits minus your monthly average cost of goods sold minus your average monthly operating expenses? This is how much you have in average profits. So your sales minus cost of goods sold, minus operating expenses. This is on average how much profit you have to work with in your business. So you'll take that profit, pay down your debt, invest back in your business through your savings account, and then you have the remainder to be able to pay yourself reasonable compensation and owner's draws. Now we'll talk about what to do if you don't have enough money in profits to pay down your debt and pay yourself. We'll get there, I promise. Now, I mentioned to you our client who not only made her 6 figures, but determined that she actually needed much more than 6 figures in order to sustain her lifestyle. She found that as she grew as a business owner and CEO in her business, that her lifestyle and her family grew as well. She created a personal budget because it is important not to ever drain your business account with personal expenses. Remember, you can't commingle your business and personal expenses. Now, this is an IRS rule, but it's also a Danielle rule. It's an IRS rule that says you are piercing the corporate veil. So if you are ever audited or sued and you are commingling business and personal expenses, you are opening up your personal assets. By keeping them separate, we're able to protect ourselves from liability. And more importantly, in my opinion, you can see the true performance of your business. We don't want our business being muddied by our personal expenses. It's not our personal bank account. We don't want to treat it as such because we want to be able to know confidently that our salary can help us sustain our personal lifestyle. So as my client's family grew, I swear older kids are even more expensive than younger kids. And as her family and her kids grew up, she realized that her personal budget grew as well. So every year when we redid her personal and business budget, we were able to see that she actually needed more in personal salary and distributions in her personal life. And we were so excited that because she made some changes in her business, she was able to pay herself her reasonable compensation plus her distributions. Now, what did we do to get there? How do you increase profits? I want to give you 3 strategies for increasing profits. The first one is 1% changes. When we talk to our clients about making a price increase, we are overwhelmed by the amount of stories that we tell ourselves about increasing our prices. But how would it feel if we just made small changes to our prices over time? That we changed our packages, changed the way we collect cash, changed the way that we bill customers in small increments over time. If we're able to make small changes over time to our pricing, we can slowly change the narrative, slowly change the story that is running through our heads and build big changes in our profits over time. All right. Number 2 is expense grading. Our longtime listeners, you guys have heard me talk about expense grading a lot over the years because it's so important. How else are we going to determine what expenses we need in the business and which expenses we don't? Our expense grading is a way of listing out every single one of our operating expenses and giving it a grade. You are literally grading it A, B, and C. This is an exercise that I used to do back in my CFO days when we were looking at all of our expenses and we weren't cutting our budget, right? Like we weren't hitting our budget numbers in sales. And so we had to make some hard decisions in the way we spend. Now, that doesn't mean we go slashing everything, but it means that we look at every single one of our expenses and what is the impact that that expense, that subscription, that contractor is making on the business today? So anything that's graded a C or lower, we can consider eliminating. If they're graded an A or a B, meaning that we use the software, it contributes to our business, it saves us time, money, or energy, increases the client experience. Those are things that we want to keep in our business because we can't let our limiting mindset keep us from investing in our business. We have to invest in the right software and people in order to help us increase our profits. But they have to be the right software and the right people. Remember to cancel those subscriptions as we make changes. All right, number 3 is focus and time. I can't tell you how many times over the years I have seen clients lose focus. Being a business owner is the long game. It is the marathon. It takes a lot of time and energy. And as entrepreneurs, that can mean we are doing the boring stuff over and over and over again. And as visionaries, I know so many of us, and I struggle with this myself, I want to go and do the new, most exciting thing. However, in business, and as we are growing our framework, our systems, and our teams, we have to stay focused for the long haul, doing the same thing day in and day out to create results for our clients and our customers so that they can continue to grow, send their friends back, and do business with us again and again over time. But it's the consistency and focus that helps us increase our profits and get ourselves paid more over time. All right, I want each and every one of you to be able to pay yourself more this year. So you are going to need to go and take action. Listening to this podcast is not going to get you paid. You are going to have to do the hard work. So the first step for you today is to determine which method you are going to use to pay yourself, either the reasonable compensation method or the rule of averages worksheet. So first step, determine your method. Step 2, you're going to review your personal and business budget. We are not draining our business account with personal expenses anymore. How much does your personal life need in order to sustain your personal lifestyle, so that we know if the reasonable compensation or the rules of averages worksheet is enough to sustain your personal lifestyle. And then number 3 is determine exactly how you are going to increase your profits. Complete the expense grading worksheet, determine what 1% changes you are going to implement today, and then stay focused, my friends. Stay focused over time, and I promise you, we are going to get you paid more and more each and every year. I have a favor to ask. If you have gotten any value from this show and you want the show to continue to grow and keep providing you with strategies for financial growth and efficiency, simply leave us a rating and review if you're listening on Apple or Spotify. Those reviews really go a long way in attracting more listeners, and honestly, they really make my day. So if you're feeling up to it, we'd love to see a rating and review from you. Either way, thanks so much for listening to the show.